The alternative investment landscape in the intermediary space continues to be dominated by truly illiquid alternative strategies. Some of the largest illiquid segments are found within hedge funds, private equity, and increasingly in private debt strategies. At the same time, liquid alternative funds had a strong 2020, driven largely by liquid alternative ETFs. Liquid alternative mutual funds suffered nearly $36 billion in net outflows in 2020, while liquid alternative ETFs netted $68 billion in inflows for the year. Regardless of whether a manager offers alternative investment strategies in liquid, illiquid, or both versions, it's critical to understand how advisors ultimately select an alternative investment. I'm Pat Newcomb with Fuse Research, and today we're going to take a few minutes to discuss findings from our Advisor Trend Monitor report, Alternatives, the Advisor View, focusing on what advisors take into consideration when evaluating alternative investments. Based on our 2021 Alternatives ATM survey done in partnership with wealthmanagement.com, more than 700 advisors were asked about the importance of various factors when evaluating alternative investment strategies and the managers who offer them. They were able to rank criteria on a scale of 1 to 5, where 1 was least important and 5 was most important. Advisors are largely in agreement when it comes to the factors that are important, regardless of advisor attributes. Advisors view the actual strategy and the track record of the strategy as the two most important pieces when evaluating alternative investment strategies and managers of the strategies, both with a score of 4.2 out of 5. It doesn't come as a surprise that performance is one of the primary drivers when advisors choose to invest, but there are several other factors that firms offering alternative strategies to advisors need to be aware of. The type of vehicle that the strategy is offered in was the next most important criteria for selecting an alternative, with an average score of 3.7 out of 5. Wirehouse advisors place more importance on this than the independent RIAs, 3.9 versus 3.7, which is likely driven by the platform requirements of their specific wirehouse firm. Independent RIAs, on the other hand, are more open to leveraging various vehicle types, including interval funds available on RIA custodian platforms. The relative liquidity of a strategy also carries some importance for advisors selecting strategies, with a score of 3.6 out of 5. Interestingly, advisors place less emphasis on size of the product and size of the manager offering the strategy, with averages of 3.4 and 3.3 respectively. This is welcome news to smaller alternative managers competing against large, well-established asset managers in the retail space. Product and manager size were slightly more important for advisors with large books of business or those with 150 million plus in assets compared to smaller advisors. Finally, the subscription process associated with an alternative investment strategy was ranked as the least important aspect when choosing a strategy. This highlights that if an alternative investment fits the strategy an advisor is looking for and has a reliable track record to go with it, a few operational hurdles aren't going to prevent an advisor from investing. Overall, there's an increased appetite for alternative investment strategies in response to persistent low interest rates and the search for lower correlations to public market returns. On the liquid alternative front, Fuse expects ETFs to continue to carry the day in 2021, while on the illiquid side, private debt will emerge as an interesting opportunity for traditional asset managers. While the track record of an alternative strategy will continue to be one of the primary selection criteria for advisors, it's important for alternative managers to understand the other factors that advisors include in their decisions. Lastly, alternative managers will be well served by taking the time to ensure that the vehicle type and the relative liquidity of their alternative products align with the desires of their target advisor audience. Thank you for taking the time to view this video. If you have any questions about the topic we covered today, or would like to learn more about other topics that are included in our 2021 Alternatives ATM report, please let us know. Thanks again, and have a great day.